So if you were spending $1,200 a month on life insurance and I flipped it, whereas let's just use say 50-50.
Mm-hmm.
So $600 every year goes directly into your cash value and $600 is your cost. But your MEC limit could be something, let's use again round number. Let's say your MEC limit is $10,000.
Mm-hmm.
So you have an additional $8,800 you could throw directly into your cash value and utilize it, getting the 6% dividend and interest, but you could access the money right away. So that's why we call it either infinite banking or building your own bank.
Welcome back to It Starts Now, the happy hour of finance and business. My name is Stanley. And once again, we have an amazing guest, a return guest, somebody that we had a great time and got a lot of information from. And a lot of us have questions, especially pertaining to what's going on in the market today and how can we bounce back from a lot of the losses that we took. And he's the perfect guy to talk about it. Please welcome back our alumni, special guest, Robert Fortune. Robert.
Thank you so much.
What's going on, brother?
I'm trying to stay alive.
Hey, man. We all trying to stay afloat.
Well, okay.
Yeah. Because there's a lot of things that's going on. And we touched on it a little bit earlier.
Mm-hmm.
But before we get started, please let people know, once again, your name, background, and what is it that you got going on right now.
All right. So I'm Robert Fortune, owner and founder of Fortune Advisory Services. It's a financial platform that was built solely foremost for financial literacy. From the time that I've been working in finance, I've been in finance for 16 years, I realized that particular people are not given particular sets of information.
Right.
And I was only privy to information because I just took a chance and started working at a bank one day. But everybody doesn't go that same route.
Right.
When I started getting the information, I was like, oh, I need to provide this. But I realized that they don't want me to provide it. So I had to step on and do it on my own.
Right.
So that's why I created a platform. I try to teach you about what assets are, what liabilities are, how you save money, how you budget, what's investments, what's the best thing to invest in, what's life insurance, what's disability, just anything that involves money. I teach you to understand it. And then we talk about what the products or the plan is going to be.
Right.
But if you don't understand it, if you don't understand what's happening or how it can develop something for you, then you're missing that piece. And then you get caught up in the traps that they have set out there for you.
Let's dive in real quickly. One of the things that I wanted to know personally, why it's important that you feel we need to have a financial planner and a financial advisor, especially during this time. Like what's the importance of it?
So let's just take the last 2 years. Everybody was sitting at home trying to figure out what's the next thing to do, how the world is going to change. So they started getting an understanding of, through social media, through other avenues, that I need to have a better handle on my money. I need to grow my money.
Mm-hmm. I need another set of income.
I need another revenue stream.
Correct.
I need a side hustle, whatever. But they didn't really understand how to do it, right? They got hit with a lot of information, say on Instagram, 30-second reels, TikTok, Facebook, all this stuff, just bombarding you with like, go do this, go buy a house.
And a lot of that information is not, it's not incorrect, but it's not detailed.
It's partial.
It's partial.
Like, how can I tell you how to create a financial plan in 30 seconds? And I'm a financial planner, I couldn't do it.
Yeah.
I couldn't even do it in 30 minutes.
Right.
So with all of that, now the trap is set where it's like, okay, I'm making money either through pandemic unemployment, I'm not paying rent, I got a PPP loan, whatever, stimulus money. What am I gonna do with it?
Right.
Oh, I heard I should open up Robinhood. So you open one up, but Robinhood is not an advisor. They're not gonna provide you any information.
Right.
So you're guessing. Oh, I should go buy a property, but you have no history, and maybe your family doesn't even have history of owning property.
Right.
So now you get caught. You don't understand the mortgage process. You don't understand the lending process. You don't understand your credit. So the reason why you need somebody like me is I can give you all those avenues to understand how to better position yourself to win in any of those scenarios that I talked about previously. Right. So when you're setting up an investment, you need to know what your investment style is. What's your tolerance? What kind of company you should be looking for first off before you really jump out the boat and take chances on companies that you don't know about. Like, so take NIO was an electric car company. So people was like, oh, Tesla makes money, so NIO's definitely going to make money. You know, you're down probably like 80% on that trade. All right. Even depending on when you bought Tesla, you're down money on that trade. Right. So you need somebody to tell you, okay, this is what you need to look off for first. But you also need to have somebody that can understand what's your personal economy. How much money do I have now that I can allocate to these things? Whereas I can still feed myself, take care of my children, pay my bills, but still develop money for the future. So take a financial plan like you take a doctor. If you got sick or you're worried about getting sick, you wouldn't go on WebMD.
No.
Right? You'd go to your
actual primary doctor.
Your primary care doctor, or you would try to find one if you didn't have one. Right? Oh, I'm worried about cancer. I'm worried about ALS. My family has a problem with diabetes. How do I combat it? Could you find some information about that on Google? Sure. Is it going to be the best, or can you decipher which is right? Because you're going to get a lot of sides, a lot of opinions on, oh, if you have diabetes, you should just stop eating sugar in general. Or you should have less carbs. Or you should exercise 10 times a week. It's like, but those three things don't even correlate with each other. So how do I know which one is correct? So you go to a doctor and be like, oh, I heard this, I heard that. What do you think? What's your medical opinion? What's your expert opinion? Oh, it's right. You should limit your sugar and you should probably work out 3 times a week. Oh, okay. So now I have a plan that I can go and do. So that's me, right? You make $3,000 a month. Your bills are $1,500 a month. You try to save X amount of dollars, but where can I put it? Okay, here's this investment plan. Oh, you have children? Here's this life insurance plan. Oh, you're worried about getting hurt at work? Here's a disability plan. Those are the kind of things that I do, and that's why you get someone like me.
That's important. Just wanted to take a time out real quickly to let people know that this episode is being sponsored by Black Mama Vodka. They have a product out right now called the Juneteenth Tea. It's actually pretty smooth. I tried it, and I hope you get an opportunity to try it as well. We're gonna have it on the show. But just wanted to let people know this episode, once again, is sponsored by Black Mama Vodka. I know Vanessa's gonna, she's very a stickler when it comes to, hey, you got to put it up there.
Listen, you got to make the money.
Got to make the money, got to make the brand. Speaking of brands, let's go back to the importance of being a financial advisor and why it's important to have someone like that on your team to make sure that your finances is correct. 2020, a lot of people invested, saw a lot of there was a lot of profit that was made, a lot of good investments, but then there was a lot of bad investments. I had people that lost $40,000. Had some people that lost, 50, 60. The amount varies between households, right?
Yeah, of course.
There were people that invested in Bitcoin, right? And they saw like a drastic dip. So my thing is, for you, when it comes to having some kind of intelligence or strategy behind being a financial planner, what do you say to those that wanted to bounce back? Like, what's a good investment strategy or thought process that you may be able to share to let people know, hey, listen, you probably lost this much from the stock market. Do you bail out? Do you stay with it? Do you allocate it to another fund? What is your expert opinion?
So for me, like one of my favorite phrases is it depends.
Okay.
So it depends because what were you investing in previously? Okay. And then I always ask people, why did you invest in it?
All right, let's take Bitcoin.
Okay. So most likely, if you invested in Bitcoin, you got caught up in the hype, right? So they're telling you Bitcoin's going to become the world's #1 currency. It's decentralized, so you're going to get rid of banks and all that.
Right.
I'm not here to argue that true or false.
Right.
From my experience, what I'm going to tell you is that's probably never going to happen. Right? Because like some of the most powerful companies in the world, not just America, are banks. And then currencies are run by governments. So like, I don't really need to say nothing about that, right? So if you got into it because of hype, then you have to just say to yourself, I made that mistake, I'm gonna learn from it. If you were the person who does believe in that, and you're looking 10, 15, 20, 30, 40 years down the line,
decades,
that eventually is going to be there, and you truly believe that, then I'll tell you stay in that investment. Because a downturn doesn't necessarily mean the investment is wrong. It just means that's what's happening in the economy right now.
At this point.
Bitcoin running up to 60,000 might not mean that it's worth 60,000. It means that that's just the hype. And that happens with regular stocks too, right? Tesla ran up to, it was like $1,200. Right now it's not trading that, right? So it's not to say that the trade was wrong. It's why are you investing in it?
Right.
Did you just buy it because you heard someone else say it? Or you're like, no, I really believe in decentralization. I believe in governments getting rid of currencies and using digital coins and things of that nature. Then I'll tell you, okay, cool. Then you should stay in that.
Right.
If you don't have a tie to it, then I would say you probably should get out of it and let's find something else that you have a connection to that you can now invest in.
Right.
So I always tell people a story about me. So when I first started investing, one of the two first stocks that I bought was Nike and JP Morgan. So I was working at Chase at the time, and I figured, I should own a stock because I know if anything happens at the bank, I'm probably going to be one of the first people who know. And then I'm a huge sneakerhead. So I got a sneaker collection. I knew everything that Nike was doing.
Right.
I knew the athletes they were signing. I knew the technology. I know everything. I knew Flyknit before people knew what Flyknit was, right? So I was like, okay, and I see that company being the leading sneaker brand 30, 40, 50 years down the line. So I bought them.
Why did you get into Nike? Why? Because you were passionate because you played sports, or you just was into the sneakers? Like, why the Nike brand?
So I'm an 80s baby.
Okay.
So Nike was the brand.
The brand.
It's like, and I'm a huge basketball fan.
Right.
So I'm a Bulls fan. So the top athletes alone were just Nike branded athletes.
Right.
So if you liked Shaq, if you liked Jordan or you liked Penny, Gary Payton, just anybody, Charles Barkley at the time, they wore Nike.
Right.
Nike was the brand for USA Basketball. Right. They was just always around.
Yeah. Okay.
So in my neighborhood, if you didn't have Nikes, you wasn't it.
Yeah.
So you had to have the Jordans. You had to, and I got into sneakers late because I'm of Haitian descent, and if you know anything about Haitians, they're not buying your kids $100 sneakers at that point. Now they're like $200 something. So it's definitely not happening, right? So that's really why. So because I was always paying attention to what Nike was doing, I understood, and I was a consumer of theirs.
Right.
I'm like a brand ambassador of theirs. So I said, okay, if they're making money from me, I got to make money from them. So on just the Nike trade alone, I'm probably up from the time when I first bought it to now, I'm up like 2,500%.
2,500.
Yeah. So that's because I had a tie to it. But between that time, it was ups and downs. Like,
so you weren't worried about the action that was in between.
Because I bought it because I know that it's going to be around 30 or 40 years from now.
Right.
I'm not trying to use the market as a get-rich-quick scheme. You always hear people talk about stock market and say, oh, it's a gamble. And I go, no. A gamble is you going to Vegas is rolling dice. That's gambling.
Right.
The stock market is once you educate yourself, it's no longer a gamble. It's just a risk that you would take in anything. Like stepping outside your house, you have a risk of getting hit by a car.
Correct.
Do you not leave your house?
Oh, you still got to
go outside. If you drive in, you have a risk of crashing into somebody or your car breaking down. If you're on the bus, right, you're a risk of some crazy person coming on and stabbing you. These are all risks in life. Right. But you still do those things. And you have to look at the stock market the same way. Once you understand the risk, then the fear is gone.
The fear is gone, yeah.
Right? What's fear?
That emotion.
The lack of understanding.
Yeah.
If you take just racial situations, the reason why we are feared is because they don't understand us and they're not even trying to understand us. So that alone is just shows you that once you understand something, the fear is gone, and now you can look at it from clear eye view.
Clear.
Yeah.
So what would be your ideal scenario? Like, you give me a scenario where you think would be an ideal risk or an ideal investment. Like, if you had the money right now, well, I'm pretty sure you do, but but let's say you had a certain amount of money, what would you invest in?
Right now?
Yeah.
Banks.
Why?
So after 2008, banks were doing crazy stuff because there was like no regulations on specific things.
Okay.
So they were buying. So it was like so 2008 happened because there was a major mortgage situation happening. It was a bubble.
Mm-hmm.
People were getting mortgages that didn't need to get mortgages. The banks were just giving it to people.
Right.
There was like no income verification. Like, you could come in and tell them you made 100,000. They didn't ask you for no pay stub or nothing.
Right.
So I knew people in Florida that had 3 or 4 mortgages. But they made like 30 grand.
Yeah.
So if you told somebody you made 30 grand, can you afford 4 homes? No. But they was trying to jump the gun and buy the properties to either rent them out or flip them.
Right.
But again, they didn't really understand the scenario about what the economy is. So the banks were then doing mortgage-backed securities where they were coupling mortgages together and then making money off it by selling them as funds.
Right.
So then the mortgage crisis happened, mad foreclosures, mortgage situation was downhill, right? Values of properties dropped.
Right.
So the banks were losing money. The government then regulated that they can't do that no more. And the government stepped in to save them. The one industry the government's always going to not let happen, go away, is finances.
Yeah.
So when I look at banks, well, you could take a look at JP Morgan, Bank of America, Citibank.
Mm-hmm.
You could take a look at even in some instances, Wells Fargo. Back in 2008, Citibank was like 99 cents.
I know. I bought stocks into it.
Okay, good. So today it trades above $50.
Not only that, at one point that I actually sold a lot of the shares because I didn't think nothing was going to happen. And that's what I learned because of that emotional aspect.
Yeah.
And then they came out with the bikes.
Yeah.
And all of a sudden they just blew up. Right. And I said, oh, man. And, I came away with pockets, but I could have had a lot more.
But you could have had a lot more.
Right.
Looking at what it is today.
Looking at it today. So to your point, for what you mentioned earlier, don't look at it from a short-term investment. Yeah. Look at things from a long-term investment.
Correct.
Yeah.
Whenever you long-term invest, you invest in the right way.
Yeah.
Short-term, is there opportunities to do it? Yeah. But there's also problems with short-term investing. There's capital gains tax. You run a larger risk. The shorter time frame you give something, the higher risk it is for you to lose money.
Mm-hmm.
The longer you give, the less chance you are. Because even if you have an up and down over that long course, when you look at from point A to point B, if you look at the start of the stock market to now, the slope is positive. It's always been positive.
Mm-hmm.
But if I tell you, look at the stock market from last year to now, like, you're down.
Right.
So,
right.
So it's how you look at it. So that's what I would say.
Just like Bitcoin. Bitcoin been outperforming in the over the years, year over year, it's been outperforming.
Sure.
But, it takes dips, major dips, right? The volatility is really...
Check Bitcoin 6 months ago.
Yeah.
Okay.
So. And it shows, right? But you have to do the research, but you have to understand and learn. That way you can know what you're dealing with before you start investing. Right?
100%.
Yeah. But I'm glad you touched on the scenario, if you had, pocket full of change where you would invest in the banks. But the banks are actually now, from what I've been reading, doing research on, the banks are actually now purchasing properties.
Yeah.
Right. What are your takes on that? Because we both know property is like another form of building wealth.
Sure.
Right.
It can be looked at a few ways. Somebody can tell you that they're doing it to limit certain communities from getting properties or having the ability to own properties, right? Because one of the 3 major ways to create generational wealth, along with investing in life insurance, is real estate, right? That's why land was limited to certain people after slavery. That's why they had red line. That's why they had that's why they had a lot of things that they did. Mm-hmm. The other way you could look at it is saying to yourself, the demand for housing is so high that there's no way that the value doesn't increase. And banks don't really put their money into things that they don't make money back from. So one true reason why you should have financial literacy is that you can look at the world in a dollar view. You can understand everything as a dollar view.
Why is that important?
Because if you can look at everything from a dollar view, then you can understand what your dollar is worth to you when you're making that transaction. You talk about Black Mama vodka. From the minute I saw it, I'm thinking to myself, like, how much money does it make? What's the revenue generating? What's the brand structure? Right. I look at everything that way. And people sometimes tell me, like, that's crazy. Like, you can't look at everything a dollar. Sometimes you just have to live your life. And I go, no. When you try to just live your life, you waste money.
Right.
You have to have a plan for everything.
Everything. Every
dollar you make, you spent time earning it.
A lot of time.
A lot of time, right? If they took, like, you, an hour of your time, some people's getting paid, you know, now that minimum wage is up, $15. $15 is not a lot of money. What can I do in an hour for $15?
$15. But the value of that hour, people don't put a dollar sign behind it.
Yeah. So time is finite for you. Time is infinite in general, but for you personally, it's finite. Right. Like, you have only a certain amount of time on this years, which then means you only have a certain amount of time that you could work. Money is infinite. They print that shit like daily. like they just, like, one of the major reasons we're in the financial crisis right now is because they just printed money.
Yeah.
Like, they said, oh, we have a stimulus package, $3 trillion. Yeah. Where you got it from? They just printed it.
Okay. Right? Crazy part is somebody that we know, we're saying, when I'm gonna get my stimulus? When I'm gonna get my stimulus? And I used to be like, we're gonna pay for this somehow. Yeah. Right? And from the back end, we're gonna pay for it. And I was
how excited were people when they got it?
Oh, absolutely.
$1,200.
1,000%. Yeah.
And you see how I think about everything dollar-wise? When they told me it was $1,200, I said, what's $1,200 gonna do? That don't even cover people's rent in New York.
True.
And they give it to you one time.
True. But people look at it, and that's the thing about when we look at free money. Yeah. We don't really realize it's not technically free.
It's never free.
But the fact that we are getting something tangible in our hands to utilize at that moment, that emotional aspect is there to say, oh, I got something, I feel great about it. So let me go spend. Some people were wise enough to say, let me invest that money, right? Because if I'm going to pay it back on the back end, at least let me make some money from it, right?
And that was one of the major things I liked about the pandemic. People was at home and they took their time, at least the ability, and they took the effort to try to get financial literacy and start investing.
Right.
Some of them still made mistakes because they didn't understand what it was, but I like that they tried it, because before, our community wasn't even trying it.
At all.
So I'm not upset. And that's why I tell people, like, if you lost in that time, that's a lesson for you.
Right, right.
Build off that lesson. Like, oh, I just jumped into it. I didn't really understand it, but now I'm going to take my time to really understand it. I'm going to work with Robert, or I'm going to work with another advisor like Robert, right? So that's that. But if people would just take the basic economics that they learned in high school, the basic economic course, understanding supply and demand and understanding economic cycles,
right?
Then nothing that happens today would fear you.
No.
Nothing would make you afraid.
That's true.
And I feel like people don't do that. They just, if I tell you I'm just going to front load $3 trillion into the economy, you have to understand that there's going to be a problem a year or 2 years down the line.
Correct.
Because that money has to leave the economy if you want to try to combat inflation.
Inflation, yeah.
So inflation is a big thing now. Inflation is 9%. Why is it 9%? One, it was $3 trillion that the government gave people just randomly. Right. And they wasn't even really having any real basis to give people PPP loans. Some people was getting $2 million and they didn't have a business and they owned like a Lamborghini and a Ferrari, right?
It wasn't controlled.
It wasn't controlled.
Right.
But they also didn't look down the line to say, okay, what's this going to do? They were just trying to, and this is my problem with politics all the time. They just try to appease you at that moment. And then they'll say, whatever happened down the line, the next administration can deal with it.
Right.
They're just trying to be liked. Like Biden is doing a lot of stuff to be liked because he's failing at the job.
Yeah. But the position itself is a like, you got to be liked or disliked position. Yeah, because whether you're trying to do good for this area, right, another area is not going to be satisfied.
Sure.
So in order to, I guess, get by, sometimes they got to pacify us and say, hey, listen, I'm doing this and I'm doing this, I'm doing that. But technically, what is it long term? What is the effect of it?
They're not going to do the research because they're not going to be around that long.
True.
The next person got to deal with that.
The next person, yeah.
A lot of stuff Trump did, the next person got to deal with it. A lot of stuff Biden's doing right now, somebody else is doing it. Bush, Clinton, Obama, it doesn't really matter. Yeah. Whoever was the president, they do a lot of stuff.
Yeah.
And then they're like, all right, I'm out of here. Right? And it is, but that's the scenario that we're in. That's the life that we're in.
Right.
So understanding basic economics will have you in this world looking like a genius, because it's you live in an economic. You live in an economy. Right, that's all it really is. So if you understand, damn, everybody wants to buy a house. Then damn, that means, what does that mean? Demand is high, supply is always gonna, if demand is super high, supply is always gonna be under that. Like there's never a point where supply and demand are the same. Like it's never at an equal level. No. One of them is always higher by a lot than the other one.
Yeah.
So everybody wants to buy one. Everybody's rushing to take this fake money that's been imploded into the economy and go buy it. So if you owned a house, perfect time for you to sell one.
Right.
If you had the ability to buy something distressed and renovate it, flip it, perfect time. But you had to be prepared to do it. You can't just go wake up one day, you only got $10,000 to your name and say, oh, I'm gonna go buy a house. Like you're gonna fail because you got no plan. Right. You have no understanding about what could potentially go wrong. And I think that like you have to look at best case scenario and worst case scenario.
Right.
And the stock market intentionally makes me look at that regularly. I always look at best case, worst case, always for everything.
Right.
So now in everything that I'm doing, when I go and spend my dollar that I gave my valuable time to get, I have to understand that. But also understand that since I gave this valuable time, that $1 has to work for me too.
It has to work.
So I got to put it somewhere where it can earn for me.
Right.
Or put it into something that's going to earn for me later, or develop something for me later.
Right.
And that could be real estate. It could be life insurance. It could be investments. It could be starting your own business. It could be investing in someone else's business. It's many things you can do. Right. It's definitely not leaving at the bank.
No, you can't have the money just sitting there, because eventually you're going to tap into that money. Yeah. And then it's going to be spent on something that's probably, has no value or cannot bring any returns in.
So whatever inflation is at that time, you have to make at minimum that return on your money.
Right.
At minimum. Because if you make less than what inflation is, all inflation really is the increase of what cost of goods sold is going to be.
Yeah. And it never really goes back down. But we keep going.
When they told me it was 2, it was like 5.
Yeah.
So they're saying right now it's 9. It's probably like 15.
Oh, come on.
I went to BJ's the other day to buy eggs. Yeah. Same eggs I used to buy like $3.99. Yeah. It's $10.99.
Oh yeah, I saw some.
That's not 9%. So I can do basic math. That's not 9%.
I mean, it's not 9% on the eggs. No, it's extremely high. Like we, even with deliveries, like I'm a advocate for Uber Eats and all these delivery, not just Uber Eats, it's all these others, DoorDash and all that stuff, because it's convenient. I don't have to go out, drive around. I don't have to, I just go online, search for whatever I want and get it delivered. But then when you look at,
what's your cost for your convenience?
It is a cost. It is a cost. Like the other day, I did a Whole Food on the Amazon app, and I was able to shop. I mean, they had it delivered, but the cost of that is $10 for the delivery, and then tips on top of that. Yeah. So when you think about it, factored in. But I kind of equate it to this, right? I'm still gotta get up, drive. I'm paying for gas anyway. Sure. Right. So I equate that $10 as, okay, I gotta get up and drive, and I gotta do all this, getting out the car, picking it up. So I try to rationalize it, which I know is a lie. Like
no, but not necessarily.
But when you think of it from that point, right, it's like it's a give and take, right? Because either one, I'm still gonna, even if I go out to sit down at a place, right, I still gotta pay for the gratuity. I still gotta pay for, the gas to get there, sit down, the waiting. There's a lot of things that factor in. When you look at it from that standpoint, I could just do it on my phone, pay, deliver, but then I'm paying for a lot of fees. There's the delivery fee, there's the taxes, and then there's the tip on top of that. So I try to balance it off from here to there. And because I look at it like, even when you go to the supermarket and you shop and then come home to cook, that food, you say to yourself that food's going to last, but it's just as expensive as purchasing food outside, right? The only difference is what you're putting inside of the
Correct.
food, right? And you're consuming that. You manage what goes into it. But as far as the pricing, to me, it's about the same. And this inflation has made me open my eyes to say that, do I want to waste time? And this is no knock on anybody, but do I want to waste time in the kitchen for an hour or hour and a half? Do I just want to order something to be delivered while I go do something else? Right? I could put a value behind that time. Right? Yeah. Not to say if that's something you love to do, that's completely different. Or that's more convenient for you, that's completely different. Yeah. But for me, it's like, okay, slaving in the kitchen for not slaving, I shouldn't say that word. But, putting the time into the kitchen for about an hour to make something versus I can order it, have it delivered, and I eat while I'm putting an hour into something else that I'm doing.
But that's a mindset that you did. Like, you sat down, you thought about it, you kind of did the numbers in your head, rough draft, whatever, but you kind of understand it. So that's you. Right. And there's tons of people like you. For me, like, I enjoy going to the store. I enjoy getting my hands on it. I enjoy cooking it. I enjoy knowing what is going inside of it and then goes inside my body. So the convenience of DoorDash or Uber Eats doesn't benefit me. Right. For me personally. Yeah. So what I do, I don't ever tell my clients to do it. I just try to figure out what is it that you're trying to do and then make it work within your money. A lot of people with convenience, they're not really rationalizing it. They're not trying to understand it. They're just going, oh, it's easier for me to do this. So I'll tell you a story. So my son was after school. So he needed something to eat. Right. So he decided to go on Uber Eats or DoorDash, one of the two, right, and order food from the Popeyes. Right. The Popeyes from the school is literally less than 5-minute walk. Right? What he ordered, he ended up paying almost triple the cost of what he ordered to eat based on all the fees and stuff. So in that instance, it made zero sense. No, because one, you could have left school and went to go pick it up and then came back. It's not a big deal. They're not going to, but you thought because it's so convenient, I don't have to leave school. Yeah. But you pay triple.
You got to rationalize it.
Yeah. And I think people in general, even adults, do that where they go, oh, I'm so tired. I went to work hard, Yeah. Let me just order the food. And it's like, that's cool. Yeah. But how much did you make at work that day?
True. But here's the thing. You're coming home from work. Yeah. Right. My thought process, and this is I'm coming home from work. I might as well pass and pick up something on my way home. Sure. Then versus
if you're going to eat out, it makes sense to buy it on your way back home.
There you go. And that to me, I try to put things in perspective. Not to say that, I won't do it time to time. No. Right. But I try to put things in perspective. I narrowed down the amount of trips that I'm going to make. If it's not necessary for me to go out, then sure. Yeah. But if I'm already out, I might as well take advantage of being out and then, pick up and doing all that.
So when I do budget planning for people, what I notice is the convenience is where all their money is going. The Ubers, the Lyfts, the Uber Eats, the DoorDash, the other ones. So therefore,
the small consuming is what impacts.
Yeah, because for people, their mindset is, oh, if it's $5 here, $6 here, it's not a lot. The whole Starbucks thing. There's people that go to Starbucks maybe 3 times a day, and if they work in 20 days in a month, you're probably spending over $6,000 a year just on coffee.
I hope my wife's listening.
I hope she doesn't get mad at me. The reason I bring it up is because when you extrapolate the numbers out, when it becomes bigger number at some point. Yeah, if you think about each cup of coffee, it's not a lot of money. Right. But if you think about how much you spend a year, If you're going to spend over $6,000, what would that do in an investment for you if you just said to yourself, I'm going to invest $5 a day, 5 days a week?
Right.
As opposed to, and you could essentially have like, you could front load the money for a Keurig machine and get Starbucks pods and bring Starbucks from home. The cost is way less per cup if you did it that way.
Right.
And then say even to yourself, I'm invest the difference. So let's say you spend now $3,000 a year on coffee, but you're also investing $3,000 a year.
Mm-hmm.
That's a different mindset. That's a different scape for you to say, okay, oh, now I'm really doing something with my money.
Right.
As opposed to just giving it away. So every time I'm going through somebody's budget plan. So what I tell people when I do budget plans with them is like, send me 3 months of your statements, and I go through with a fine tooth comb, and then I categorize everything for you.
Mm-hmm.
And then I show you, okay, this is where you're spending money.
Right.
But before I do that, I tell me how you spend your money. Like I send them a spreadsheet, write it down, tell me what you spend. And I don't say nothing. I just go, I send it to them, email, fill it out, send it back to me, and then send me your statements. The dichotomy between the two is so stark that it makes my job easier to get them into a budget plan. Because they don't really understand, because people don't really understand how they spend their money.
No, we don't.
They have no idea.
No, we don't. Yeah.
And it's, you hear the same thing all the time, like, oh, I make so much, but I don't know where it goes.
Yeah. Or
I should have savings. And I go, okay, this is where it's going.
Right.
And it's not to say, aha, I got you. Like, let me show you how you're effing up. No. It's to be like, okay, this is how you're living your life now. This is how you thought you was living your life. And then this is what you want to do.
So you bring awareness. And
I bring awareness to it. Mm-hmm. So you can and I let you make the change. I don't tell you got to drink less coffee. No. I don't tell you got to sell your car. I let you make the decision. Because I tell you, unless you find these dollars to make this happen, this will never happen for you. Owning a home, creating generational wealth, saving for your kids' college. So if you continue doing this, you'll never get that, and you'll create the same stigma that was created for you. The same stigma that was created for your parents.
Yeah.
So we have a thirst now for generational wealth, and to do it, we have to beat generational curses.
Yes, that's amazing. We talked about, you mentioned briefly about life insurance. Mm-hmm. All right, we talked about it before.
We talked about it in the last one. Yeah. We didn't have enough time.
No, we didn't have enough time. But I think it's important for people to understand why life insurance could be an asset.
Yeah.
And how can you benefit financially through this asset?
Yeah.
You want to touch on that? Before then, let's.
Oh, you want to taste this first?
Yeah.
All right. Let's see what Vanessa did here. Cheers. Okay.
Right?
Yeah. I'm not a big vodka guy. Yeah.
So what's your drink? What's your drink of choice? And then we could touch back on the.
I don't look ghetto, right?
Well, hey man, if it's Hennessy, it's Hennessy.
It's Hennessy.
Yes, I love my people.
I've been a Hennessy drinker. I'm a brown liquor guy.
Yeah.
So,
but this, and nothing wrong with that.
There's nothing wrong with it. Yeah. It's not for everybody.
No, it's definitely not for me.
But aside from that, I've asked a little bit. I like Scotch. I like whiskey. I like Macallan. I like Jameson, Glenlivet.
Yeah.
Things like that.
Yeah.
Right. So, but if it's brown, it's better for me.
Yeah. Of course.
I'm not a tequila guy unless it's like Reposado.
Yeah.
Like so.
Yeah.
That's just me.
No. My passion was brown. Then I realized how much sugar was in brown, so I kind of like.
Yeah.
So I take a back seat.
Okay.
Put it that way. Like every now and then I'll touch the brown, but for the most part it's clear for me. Yeah. But if I had a choice, it would always be brown. Minus the Hennessy.
The clear causes headaches.
Absolutely.
Causes hangovers.
It does.
That's why I kind of stay away from it.
Yeah, it does. But, the brown has a lot of sugar. So if you drink the clear correctly, you'll be all right.
Yeah.
Yeah, but it's just that it's all about the consumption,
Yeah.
right? And your body, and some people can tolerate it and keep going, right? And some people just one little thing. Like for me, if I'm like champagne, if I have a little bit too much champagne, that's it for me.
I got terrible stories drinking Moet.
See,
I don't want to get into it. My friends know, so I don't even have to mention it. When they see this, they'll understand what I'm talking about. But when I was younger,
man?
It's just one particular night, but I digress.
You want to share?
Nah.
Seems like you want to get a
Nah, you just can't forget it. So, but when I was younger, I could drink
that's different.
I remember when I was I had a birthday party one time, and I drank like a whole bottle of Hennessy for myself.
Seriously,
so I had a high tolerance when I was younger, but then I stopped drinking like that.
Right.
So my wife would tell you, I have a stocked liquor cabinet that I barely touch. It's for show.
Yeah. I know. I got a whole shelf. It's nothing filled with different types of alcohol brands, and for some reason I only touch it when people come around, or if I go outside, then I'll drink. But for some reason, I used to be able to drink by myself, like have a glass and just relax at home. Now I can't do it anymore. Yeah,
you would pass down on the couch.
Yeah. The bounce back is not the same.
No,
definitely not the same, man. Like I'll be struggling.
Yeah.
So I'll be like,
that's life.
Yeah, it is. It is. We get, the older you get, the more you understand. Your body said,
the wiser you get.
The wiser you get. I like that. The wiser you get.
Yeah.
And your body tells you too. Your body said, this was cool when we was in our 20s, but nah, slow down, bro. Your body
relax a little bit.
Relax a little bit. Like pause. Yeah.
Jeez.
Nah, but let's go back to using life insurance as an asset.
So, life insurance in general, it has about 40 plus benefits to it. So for the moment of time, right, I'm not going to touch on every one of them.
Right.
So one of the major benefits of life insurance that people understand is cash value. Right? What's cash value? Cash value essentially is a separate account that your life insurance uses, that they put part of your premium into that account that earns a guaranteed rate on it.
Right.
So companies can be different, right? You could have an index universal that averages maybe 11%. You could have a whole life through like Guardian that averages that gives you 6% interest plus dividends, right? You're like a share of the company. It's almost like a stock, right? Mm-hmm. You get dividends and interest to it. So boom. The problem that people have with life insurance cash value is you'll hear, just ask anybody, oh, you have life insurance? Yeah. What's your cash value? Oh, I've had it for a while, but I'm not really developing nothing. Because the average life insurance plan, the company is going to try to skew your dollars that go into the cash value as opposed to the paying of the death benefit or insurance costs, skew it 90% in their favor. And the other mistake people make with life insurance, they try to spend as little as possible. So let's use round numbers. If you got $100 that you're paying for a premium, $90 of it is going to pay for insurance costs, and only $10 is going into your life insurance cash value. So even if you made 15% on that money, $10 every single month is not going to become anything in the time frame that you need it to become.
Right.
So what I do when I create life insurance plans for people is I try to flip it. I try to get it as close to 90% in your favor to grow the money. But it can be costly because we all know whole life insurance is costly.
Yeah, very costly, especially the older you get.
What are you paying for, right? There's a limit of how much money you can put into cash value every single year. It's a modified endowment contract limit, or MEC, or MEC limit, right? So I gave that because I'm going to use that. I'm not going to say the longest.
Yeah,
right?
yeah.
I'm going to give you an acronym. So a MEC limit tells you how much additional money you can throw in besides your premium every year directly to cash value and earn 6% on that money plus dividends. So your MEC limit is going to determine your death benefit, and your death benefit is going to determine your premium. How you build the death benefit determines on how much of your premium goes directly in cash value. So again, let's use round numbers. So if you were spending $1,200 a month on life insurance, and I flipped it, whereas let's just use say 50-50. So $600 every year goes directly into your cash value, and $600 is your cost. But your MEC limit could be something, let's use again round number. Let's say your MEC limit is $10,000. So you have an additional $8,800 you could throw directly into your cash value and utilize it, getting the 6% dividend and interest, but you can access the money right away. So that's why we call it either infinite banking or building your own bank. So that money's getting thrown directly in cash value. It's a separate account that you can access at any point that you want to access it. So let's say you had a savings at the bank and you got $10,000 in there. Let's earn you 0.003%. So you're making pennies on that money. Like if I told you my savings account number and how much interest I make on it, like you would never want to be at a bank. That's how ridiculous it is. It's like, how do I have so much money there and I don't make anything? I have a large savings and then get this, I don't pay tax on the interest that I make because I make less than $10.
Holy crap.
So I could take $8,800 of that and throw it into my cash value. Earn 6% of it, let that money grow. And then later on, when I want to buy a house, when I want to pay off my car loan, when I want to pay off my credit card debt, when I want to pay for my child's school, that money's just going to develop and develop and develop. Imagine if I did that every year. How much of a savings nest egg I could have. Because one of the people's main complaints about saving is that they don't make any money on it.
Yeah.
So then they don't save.
They don't save, yeah.
When I first got into banking in 2006, the average savings rate for people in America was negative $500. That means the average person in America was in debt by at least $500.
Yeah.
So nobody was saving. Today, people are saving at a better clip, but still, it's so poor that nobody ever feels like they're in a good position, monetary-wise.
Yeah.
So aside from the cash value aspect, the one that people love the most, do you understand that you could use your death benefit while you're alive?
Oh, really?
Yeah. So let's say you got sick, right? So let's use actual numbers, right? So on average, a Black man in America is expected to live till 85 years old, right? You're probably 4 times more likely to get a chronic disease than you are to die.
Yeah, that's true.
Okay. So on average, a chronic disease, ALS, heart attack, cancer, renal failure, right? A stroke.
Oh, a stroke.
4 times more likely to have one of those things happen. On average, those situations are going to last you on average 7 years. And by insurance costs, health insurance costs and medical costs, on average is going to cost you out of pocket $50,000.
$50K.
How many people have $350,000 lying around to pay for their care?
Not many.
Okay. If you had a life insurance contract, and not every company does this. This is why, again, working with somebody who knows things, right? Companies will give you the ability to access your death benefit to pay for your care if you got one of these situations. So when I say average 7 years, some people, it may last them 15 years.
Right.
Some people may last them 1 year.
Right.
But you still need to have 50,000 on minimum to infinite amount of money, right? So they'll tell you, all right, if you get one of these things, they go with your doctor, you can access this option or this rider inside of the contract that you can draw that money that you need for your care from the death benefit. Now people go, oh, well, what does that mean for if I pass away? Well, if you drew that money, then your family gets $50,000 less if we're using round number. Oh, but is that better for my family? I'll ask you, what's better for your family? That you use the $50,000 from the death benefit that you were going to leave them, or that you died? Right?
Yeah.
Like pay for your care to still be here.
Yeah.
And then like buy more insurance later.
Right.
Don't like one major impact I see with people, especially people of color and people from the Caribbean. They live the worst life so they can leave their family whatever minuscule dollars that they had, which is retarded to me.
Right.
Like, you have to live your life. You have to make sure, because the longer you live your life, the longer you're going to be around.
The more opportunity you have.
The more opportunity you have to correct certain things, or even purchase more insurance, or save more money.
Save more money.
If you run yourself into the ground, but you got $350,000 lying in the bank, and I saw this from older people. They had like $300,000, $400,000, $500,000 sitting in the bank, and they're living in a hovel, or they're not going to get the care, or they get a situation like cancer or whatever, and they don't want to go to the hospital. They don't want to pay for the chemotherapy, stuff like that, because they're saying to themselves like, oh, if I use that money, then what am I going to leave my family?
Yeah.
Your family rather have you than the dollars.
Right, true.
So if you have a situation where you retired and you had a pension that pays you $50,000 a year, but you also had a 401k that you had, over $500,000 in, but you also saved over time. And this is like probably like best case scenario, but you also had money saved over time. You have $250 saved in the bank.
Right.
Why would you want to touch any of that money? Your 401k money, number one, you're going to have to pay tax on that money.
Yeah.
And nobody wants to do that.
Yeah.
That's why most 401k money stays in a 401k. And nobody ever touches it.
Yeah.
You don't want to take the money out the bank, because the bank's going to tell you you're no longer a private client. That's important to people for some reason, even though they don't do nothing for you. And I can tell you from experience, because I'm a private client at Chase, they do nothing for me.
Right.
Like, the customer service has become so terrible that I'm confused on why I even have my money there.
Yeah.
Right?
You ever consider mobile banking? But go ahead.
Yeah, but so for stuff that I need to do, I unfortunately still need to have a physical bank.
Well, go ahead.
But if you could leave that money alone, not worry about taxes, penalties, all this other stuff, and you had a death benefit, well, the death benefit is a number that, you can leave your family, but think about all the other assets you accumulate over time. When people go, how much money do I need to have in life insurance? I go, what's your assets? Because I don't need you to pay for $500,000 or $1 million life insurance.
Right.
You got a house that's paid off. You got savings. You got a 401k. You have retirement. You have a pension that your spouse can get. That's money. That's a death benefit.
Right.
So why not use the life insurance aspect to cover you for everything else? Build up your money that you can use in case you need to go borrow money. Nobody wants to borrow money. Why? It becomes a hassle. What's your credit score? Let me see your taxes. Let me see statements. Right. Oh, where'd you get this deposit from? Like, why are you asking these questions? Like, I need to borrow money. Like, what's the problem? Right? So build your own bank there. And then if you get sick, which is more likely than you passing away,
correct,
why not use that money to pay for your care and then still have all the other assets leave your family? And that's the financial literacy that I push forward, to understand what life insurance is, but also doing these other things where you can have assets to leave your family. Because the average life insurance agent who's just trying to make a commission off of you will tell you, oh, you're this old and you have this much as a salary. Oh, then you need $1.5 million in life insurance. But then the cost is so astronomical that you go, I can't do it, right? And plus, you're not creating any cash value with it, because most of those policies, you don't even start creating cash value until 5 years later into the policy. And then they'll tell you, oh, okay, cool. So you can't afford it in a whole life. Then you buy it for you in a term.
Yeah.
Oh, but I'm 25. Let me buy your 30-year term. Okay, I'm not trying to die before 55. So now 55 rolls around,
right, and
the insurance company's going to tell you, oh, we can keep this policy going on a year-by-year basis. So you were paying $50, but now this next year you're going to be paying $100 a month. On the year after that, $200. Year after that, $400. Year after that, $800.
That's how they make the money.
Then you go, oh, I can't afford this no more. So now you don't have insurance. So now when you die, you have nothing. You haven't created any cash value. You haven't left your family anything. And you really haven't done what you're supposed to do if you buy term. You're supposed to invest the difference. So if they told you your whole life is going to cost you $300 a month, but I'm going to give you this term that's $50 a month, you should be investing the other $250 every single month, because you can build money enough that you can supplant the life insurance by the time 30 years from now. If I told you to invest $250 a month every month for 30 years, you would have well over probably $500,000.
Yeah, I'd rather take that route.
So you rather take that route. So you have to understand what it is. You have to understand who's selling you it, why they're selling it to you, but what's the benefits and how I need to use it for me.
Yeah. No, that's important information. I'm glad you're sharing this with us.
Yeah.
Yeah. Because now And then I said this before, last time we touched on this, is that a lot of this information is not out there. And it's important that we learn that there's different ways of making wealth, and there's different ways of saving. And that way you could benefit not only just yourself, but also your family, right? Because right now we all want to leave a legacy. And the most important way to leave a legacy is really having generational wealth.
Yep.
So that way your family can build off of, and that's how your legacy grows. Because they say, okay, this person was a founding father of what we have right now. And it could start with you. And the only thing it takes is having this kind of type of information and conversations.
Yep.
So that way we can be informed and make better decisions when it comes to our money.
So this is what I tell people about generational wealth. In your lifetime, you're not going to see it. And you have to be okay with that.
Yeah. Yeah. 1000%.
Generational wealth is what's going to happen for my grandchildren, my great-grandchildren, right? Look at some of the major names in America, right? Hilton, Trump, Rockefeller, JP Morgan. At some point, that person's legacy started when they first came over here on the Mayflower.
Yeah.
Right?
Yeah.
And they were benefiting a situation where they were treated differently than other people, better than other people, so they were able to build that legacy. We didn't have the opportunity for 400 years, right? Now you have the opportunity. Are there still people that are looking at you that want you to fail? Yeah. Can they really stop you right now? Not really. If you really think about it.
Too much information.
Yeah. This idea of the man is trying to stop me. That's dumb. Yeah. Get that out of your head, right? Yeah. Like the only thing that's stopping you is you.
Yeah. So, especially in this day and age with all this information, all this access.
Yeah. So you have the access to all these things. Like I have access to it. So, and I didn't do anything special, right? I didn't come from anything. Like my family never spoke to you about money. So I know that I'm going to try to achieve being wealthy. I'm going to try it.
Right.
But if I don't do it, I'm not going to look at myself and go, oh man, I couldn't do it. I messed up.
No, but you sit in the bar.
For me, it's like if you could leave your son or your daughter 50 grand and that's all you could have accomplished at that time, that's better than what your parents left you. Like they left you nothing, right? like when you became 18, they didn't hand you a check to say, okay, here, go buy your first house or whatever, right?
Yeah.
If you can do that by the time your child's 18, that's amazing. If you can't do it, and by the time you die, you lived in 50 or you had a life insurance of $100,000, $200,000, cool.
Yeah, it's a starting point.
It's a starting point. Yeah. What you have to understand also is in your lifetime, you have to teach them, right? Don't sit there and say, well, they'll get the information the way I got it. No. Talk to them. Tell them. Even if it's something that you don't even understand that you can do yourself. I can't afford life insurance the way that I want to do it. But I'm telling my son, this is how life insurance can be used. That's a benefit. That's an asset that you're leaving him. So that now when you leave him the $50,000, $100,000, he doesn't go, let me go buy some gold chains. Let me just go buy a car. Let me go rent a high-rise downtown Brooklyn because I have the money. Because $50,000 to a child with no literacy and no understanding of money, they think that is infinite. Yeah. They think it's a lot of money. Right. And it's not. No. Like that'll be going in a year or less. Right? Less, yeah. But if you told them, take the $50,000, go invest it in a property, go to Chicago, go to Texas and buy a unit, buy a building with a few units. Now you got residual income coming in. Yeah. That's the stuff that you need to talk to them about. Yeah. The same thing that you want to do now that you may not even accomplish. You may be too prideful or shameful because you didn't accomplish it to tell your children this is what you can do. Yeah. It's important. Like remove the pride. Take it out. Like your kids are going to love you unconditionally. Yeah. If you don't teach them nothing, you did them a disservice. And all that's going to happen is, and this happened to me, in their formative years, they're going to be angry with you because you didn't tell them nothing. But I learned later on in life that I can't be upset at my parents because my parents, that generation, didn't have the information or any access to it. Now, your children will have the right to be mad at you. Yeah. Right? Because you have the access
and the information.
And you just and you don't want to share it with them.
Yeah. But I also understand, like with my parents, my mother's was keen instinct when it comes to investing in property. She knew the value of buying.
That's property. Amazing.
Yeah, she knew that. Keen instinct. Sharing the information, she didn't know how to articulate it. You know, she just knew how to do it. She's like, it's innate. You know, she said, "Oh, we got to get this, we got to get that." But the conversation wasn't, you know, you see it.
Yeah.
But the conversation wasn't held at the table.
Mm-hmm.
Hey, this is how much we put down. This is the interest rate. This is, you know, this is the cash flow. This is, you know, things like that. I think is very valuable.
Yeah.
Even if they see it, but don't understand it.
Yeah. That's what I was about to say.
Help. Yeah.
No, I don't agree.
Okay.
Seeing it
yeah,
is a conversation in itself.
Well,
there's a lot of things that you see your parents do.
Yes.
And then
yes.
as you get older, you realize that's why they were doing.
Yes, yes.
And it don't take you long. It's not like you got to wait till you're 45 to realize, oh, that's what they were doing.
Seeing it, you're right. But seeing it is more of, I know it could be done. I've seen it done. I can't accomplish this. And seeing it also gives you to know, okay, I know they were able to do it. Let me go back and ask, how were you able to do it?
That too.
Yeah. But I think that if that conversation was held at the table more.
Sure.
Yeah.
But that's best case scenario.
Well, that's the case that we should be looking at.
Yeah. We should this generation now should be looking at that.
That's what we should be looking at.
But you can't hold animosity.
No, there's no animosity at all.
So like for me, like my mom is not financial savvy at all.
Yeah.
She's a great saver though.
Yeah, yeah.
The one thing that I always credit my mom for on my financial journey, whether she meant to do it or she didn't mean to do it, was when I turned 14, she got me working papers, she got me my first job. Mm-hmm. And the first thing when I got my first paycheck is she took me to the bank and made me set up direct deposit.
Right.
That was the starting point of my financial journey.
Yeah.
She never had a conversation with me about how much you should be saving, why you should save, what your money can be later on. She didn't understand any of that. She knew whatever you can do is save and save.
Yeah.
My dad, on the other hand, so again, I'm Haitian.
Yeah.
Haitian dads don't talk to their children.
No.
At least the old generation, because I tried to talk to my son, but he didn't want to talk to me. So it's different. It's weird. But my dad was always investing. My dad used to work at banks. He has a degree from NYU. Mm-hmm. He was an accountant for the board of education for like 40-something years. So he had some financial literacy.
Right.
Maybe not the most.
But they didn't explain it.
He didn't have what I have now, but he had some form of financial literacy. And whatever that form was, you should have gave it. To this day, I'm 41. Me and my father never had a conversation about money. My dad has been investing my entire life. Yeah. He's had life insurance my entire life. He's been saving my entire life. He's never had a conversation with me. Mm-hmm. To the point now where I'm my dad's financial advisor. I manage his finances. And we still don't have a conversation about finances.
Yeah. Well, it's that
so
male. It's
so that was that situation.
Ego back then.
So I tell that to show people like I didn't come from that. Right. So the same things that you dealt with your parents, I dealt with mine. But I'm in the same boat as you saying now, we can't carry that.
No.
We have to. So I talked to my dad.
We can't. The thing that you said earlier is that, you know, you can't fault nobody. It's nobody's fault because they were never taught that way.
Correct.
Right.
And nobody was banging in the door saying, oh, this is how you get wealthy.
No. Nobody was saying that. And they just knew, some people just knew by principle. Maybe they had some education or maybe somebody shared that information along the way.
Sure.
But they grew up knowing, okay, I can't articulate it a certain way. I can't express it, but maybe we didn't seek that information for them to say, hey, you interested?
Right.
Let me show you. Right. So there's no animosity or anything like that. It's more so like you understand that, okay, they didn't have the way to articulate it and format it in a certain way for it to be explained. Mm-hmm. But, you know, you can take some of that, whether through seeing, right? Mm-hmm. But I think at this stage right now, it should be conversations that you have at the table from an early age. They don't have to, as a young kid, you don't have to force them to accept it.
No.
But it should be something where, okay, if I get older, at least that information was embedded in me.
Yeah.
So I can have a better understanding. Yeah. Now, if I choose to go that route, then that's on me. But at least I understand it to make better informed decisions.
So for me, what I learned with children is they watch more than they listen.
True.
Like they will imitate you.
But you got to repeat it enough.
But that's what I'm saying. So my son imitates me.
Yeah.
Right. He does a lot of things that I do. He has a lot of my same mannerisms. Right. but he doesn't listen to the things that I tell him to. And I understand that because he's 14. At some point, things are going to click to him in his mind.
Right.
So I just have to keep putting nuggets in there for it to click later.
1,000.
Right?
Yeah.
So that being said, I agree with you. If you don't have the ability to articulate it, you may go, oh, life insurance is a great thing. And that's all you know. You can't really explain cash value. You can't explain death benefit, income producing life insurance.
Right.
You can't explain that stuff. One thing that I do is I have seminars with families. Like I'll come to your house and I'll talk to you and your children. And I'll explain it to them in a way that they can understand it. And if I come in there, then they listen to me. If you tell them, they just watch you. So what they'll watch now is that you brought somebody in to tell them about something, and they'll hold on to the information, and they will, and then they'll remember that.
Yeah.
Right. So why I say is that you don't have no excuses now. Even if you can't articulate it, you can bring somebody who can articulate it, and that's what you need to do. And I will say this, right? If you're working with a financial advisor who's not willing to do that for you, they say, oh, that's not something that I do. You need a new financial advisor. We are in a scape right now where you can demand certain things of the people that you pay. I tell all my clients, I work for you. Like you pay me, right? So I work for you. I'm your employee. So you need to utilize me, right? Some of my clients talk to me daily. Some clients of mine speak to me once a year. That's a choice that they're making, right? I reach out to them, but they're going to speak to me at the level that they want to speak to me.
Right.
But you have the ability to utilize me. Oh, I heard about this stock. Shoot me a text, a DM, an email. I'm going to answer you. Oh, somebody was telling me about Bitcoin. What do you think about it? Somebody was telling me about Tesla. I'm thinking about buying a house. I'm thinking about doing this life insurance. Like run it by this person. If you can't do that, you got to get rid of that person. That person is just feeding off of you. Right. Most times you're going to go to a bank and you'll be like, oh, they have a financial advisor there. That's where I bank. That person don't care about you. I'm going to be real with you. Right. I'm not going to name any particular bank, but I worked at several banks. While you're working in that position, you don't care about the person. Why? Because you have a commission to make. And sometimes you have what they call a draw, which is money that you owe the bank.
Right.
So the only way to make that money is I got to get as many people in the door and put them in some product, whether it's right for them or not, that they can pay every month for, that I now make a commission off of, that I can now give to the bank, or I can make money for myself. And you have to understand that. Every financial advisor you have, you're going to pay them. What are you paying them, and what they actually doing for you is what's most important. So for me, when I deal with my clients, I tell them all the time. I tell them exactly what the fee is up front, what you're going to be charged for my advisory services, what you get from my advisory services. And I tell you, if you want to speak to me every day, like that's within your right with the money that you're paying me to speak to me every single day. But you have to be the one to want to do it. So that's why this generation, I tell people all the time, this generation who has the ability to know, to have the information of everything that's out there, you have the ability to get as much information and utilize it as much as you want. If the generational curses don't end or start to end with this generation now, it's never going to end, because you're never going to be at a point better than now. Yeah. Because right now you have access to all information. Yeah. Is there another point where you're going to have access to all information? You're always going to have access to all information now. Yeah. You're always going to have access to all information now. Between advisors, Google, TikTok, YouTube. Instagram, YouTube. You want to learn something? You can go and learn it. Yeah. You can go to school for it. Yeah. There's programs online where you can learn. You can say to yourself, I want to learn how to be a financial advisor. I might not even go out there to get clients, but I just want to take the course, understand the financial knowledge that they have, and keep it for myself. Yeah. And use that with my family. You can do that. No one's going to say, oh, do you want to have clients? Right. They're not going to stop you from doing it. So the access to information now is at 100%. So that means that it's always going to be 100%, unless they try to take it away from you again, unless they find a way to take away from you again. But they can't really do that. So it being that, if it doesn't start to change now, it's never going to change.
Yeah, I agree with that 100%. Listen, This been great, brother. But at some point, we got to end.
Apparently, you could tell I'm passionate about this. So I could talk about this for the rest of my life. Apparently,
we could talk about this because one of the things I like my boy Shane. He's a stickler for cash flow. He's addicted to cash flow.
Yeah,
like, everything is cash flow. And I remember sometime we talking about a deal. And when I got in real estate, I didn't really understand like the cap rate and all that. I just knew it. I just knew what was a good investment because I knew like what I can. But that's passed down because my mother she invested in properties and things like that. So you there's certain things that's passed down. You see, you understand, and you know how to make. But now I understand and the cap rate and all that stuff.
Yeah.
So and you get more informed, and you look at cash flow and it's completely different, right? You're like, okay, you need streams of income, you need some residuals, you need some cash flow to come in. You got to get your dollar bringing in a lot of return on investments. But the thing is always a plus to have somebody that specializes in financial literacy and knows how to structure certain things for you, because it makes the path a lot easier. Even Vanessa has like her family, she has advisors too, right? Where they break down, their spending habits so they don't overspend. One thing that Vanessa shared with me, this was powerful. She said, it's not that, some of the other races are ahead of us. They just make it look good. They just make it look good. They in the same kind of situations too. And when you start accumulating wealth, you start to realize that you probably, inch ahead of you because we probably mismanage our money somewhere down,
Correct.
That kind of causes a curveball. But they're not that far ahead like we think. The perception is, yes, you have those billionaires and millionaires, but on average living, she's like, they're not that far ahead. It's just they make it look good.
By the average person, no.
Yeah, no.
But those billionaires, they're another set. I always tell people, don't count Jeff Bezos' pockets.
No,
like
he's different.
Yeah, he's on a different stratosphere.
He's different.
But an average Black, white, Indian, Asian person, average, you're in the same boat. And honestly, the only color that matters in this country is green.
That's the only thing. And we had a discussion about that. And I said, I don't, for me, and it's nothing personal, but I'm not this advocate of this person versus that person.
Right.
I'm an advocate of what's good and what's not good.
Correct.
There's only good and evil to me.
Correct.
You got some good people on that side and you got some messed up people on this side. So it's like, to me, I'm not an advocate of one versus the other. I'm more of an advocate of there's some good people out there, solid people, and then there's some rotten people, some scumbags. And
you just have to figure out which is which.
That's it. And then just navigate the waters and try to be on the side with the good ones. Every now and then you're going to come across a scumbag and you learn from it and then you just move on. But it boils down to money, because if you can't finance yourself, right, how are you going to finance your family? And if you can't finance your family, how are you going to finance your generation, right? And it trickles down to that. So you can argue all you want from this spectrum of they versus them. Yeah. But it boils down to, can you financially take care of yourself? And
I think all that is excuses.
It is.
It's a way to end up blaming somebody else.
It's pointing fingers
for you not doing what you're supposed to do to be better.
Yeah. Now there's some people that actually went through a lot of the issues, right?
Sure.
But I think in this day and age, it's like, okay, like you said, all the information is out there. Like you said, you have access to so many things. So it's like, what's the excuses?
Yeah.
Right? Because there are no excuses. So now it becomes more of, are you putting yourself out there to position yourself to get ahead and then protect your family, protect what you built, And then the thing is, like, in this country is about protecting your land and your family.
Yeah.
Right? And your land is what you built, right? So if you built this foundation or you built this generational wealth, you have to find ways to protect your land, your family and your land. But if you're too busy arguing and bickering over stuff, and for some people is rightly so, right? I look at things like this: is if it's important to you, then go ahead, fight for it.
Right.
But that may not be important for me.
Correct.
I may look at things this way, right? And this is more important for me.
To each his own.
To each his own, right? And if you like it, I love it. So it is what it is. Right? But I'm in this direction right here. Right. But if you okay, hey man, more power to you. But I'm glad that, you know, like I said, you're very passionate about it. You bring a lot of information. It's a good source, a good resource to have. And, you know, please reach out to, when you get a chance, reach out to Robert. All the information is going to be below in the link. That way you could tap in. If you have any additional questions, maybe he can answer.
I'm going to shoot it now. So Robert Fortune, email is rfortune@fortuneadvisoryllc.com. You catch me on Instagram, Fortune_advisory. You catch my personal. I post stuff on there as well. New Money Fortune. But just like Stanley said, he's gonna link it. Please tap in, like reach out to me. Like consultations are free. I just want, honestly, what I'm trying to do with this platform is give everybody the ability to put themselves in a better position for, like you said, for their family. Mm-hmm. So if you have a financial advisor already, you need to ask that dude or that lady, what are they doing for you? And actually have a real conversation about what your goals are. And if they're not doing that, you need to find someone like myself, because goal setting is one of the most important things. And honestly, each advisor isn't like the number one source to all information. Just like you gonna go out there and shop your car insurance or your homeowner's insurance because you want to find a better rate, you need to shop your advisor and put them on notice that they can lose you if they're not doing what they're supposed to do for you. I have a very, very, very low attrition rate for my clients. Like I have clients that I've been working with for over 10 years. Every one of my clients becomes like my family. Yeah. I treat your money like I treat my own money. So that's one thing that you never have to worry about. So to me, financial literacy is the key to financial freedom. And I'll just leave it at that.
Absolutely. Let's end it with that. My name's Stan Lane. Have a good night. Don't forget, it starts now.